Hello friends, welcome to my channel and thanks for watching this video. So we have ended with one more volatile week if you're looking at the Wall Street, and it's not only happening in US market but it's happening across the globe. So volatility takes over again, and we have seen some low volume trades because we have officially entered into December, and I have been saying this thing that this last month, or hopefully the first 2 weeks of January, so till January 10th, the volume will be lower because most of the market participants will be on holiday, and most of the companies will be on winter holidays and Christmas holidays. So volumes will be thin, and trades will be volatile. And the kind of circumstances we have right now as far as the global and geopolitic or geoeconomic events are concerned, it is putting negative pressure rather than a positive one. So in the midst of all these events, let us see what has happened in the last 1 week and what will probably happen going forward. So let's start another session of USA weekly market report, and let us see what are the major headlines that will probably impact the market. Number one, Brits told to rethink Christmas plan with strike set to hit flight and train again. So winter has finally approached, and there is another one. European Central Bank warns that EU gas price cap risk financial stability. Now, if the geopolitical tension does not stop at least in the next 2 months, or this month or next month, the least I'm saying, then obviously the most impacted economy will be Europe, because we have officially entered into the winter season, and gas is like a daily commodity use for cold countries, and obviously it will have an impact on them. So it's going to be a very important event, I would rather say, to look at, and the impact moreover as far as the gas, petrol, or as far as the energy prices are concerned in the overall Europe or UK economy. Apart from that, let us see. This is a pro one, so I can't open it. Wall Street says a recession is coming. And I've been saying this for the last 2 or 3 months, and it's been very clear if you are looking or observing the yield curve. When the short-term yield overcrosses the long-term yield, or when the overall yield curve has become inverted, which is very much clear for the last 2 or 3 months. Obviously, uh, forget about the stock market, but an economic recession will always come, whether it will be a big one, slow one, hard landing, soft landing. I'm not talking about the consequences. What I'm talking about is the primary impact, and it indicates all recession, and that's very clear. Dow edges higher Friday but heads for the worst week since September on rate fears. So, Dow has become volatile, or the overall US indices become volatile, and I don't know how much you're talking about the rates, because we know, and most of the institutions have already factored in the terminal rate as far as their analysis is concerned, and how much is going to be left, okay, on the table even after 4.5% of rate hike. So that is yet to be seen, but hopefully the more we go higher, the more closer the terminal rate be. So this is a good sign. So it's all about half glass empty or half glass full, and depending upon the perspective. And you know the next one, Russia's Ukraine onslaught shows a zero sign of a winter lull as conflict rages. So this is not at all a good sign. Not only for the European economy or the cold states or cold countries, but for the entire globe. Yeah, because they are the biggest exporter, and forget about export or import. If happiness will thrive when there is peace. So that's the most important thing that we need to understand. And I pray for the safety for all, and I wish that things will normalize going forward. That's what I can say. And let us see what else do we have here as far as uh, the news which will impact the stock market in the upcoming week. So TSMC bucks broader chip slump with 50% revenue surge helped by Apple iPhone orders. So this is company specific. So I think this is most of it. So let's go and see uh, what the market is saying to you. Because and yeah, one thing, this is, you can include this statement as a footnote, or this is a very important thing just clicking into my mind. So if you want to trade in the month of December and January, then just sit quiet for a while and think that what you are going to do in the next 2 months. Obviously this is a winter season, so you will spend most of your time inside the house. You probably order your food, you probably watch movies or shows or online gaming or whatever you want to do. You want to use some platforms, or even if you want to go out to enjoy December or January in different parts of the world. So these kind of themes may work out as far as the uh, you know if you want to go for some sort of trade to earn some money. Because see, you need to understand one thing: it has been 2 years, 2.5 years where the world was stuck, so outside activities were actually zero. Now this is the official year 2022 where we have seen the outside activities have already been started, and holiday seasons where people started moving out, and they want to spend holidays outside the house, because for the last 2 years that's been happening. So all these themes may work out for you, okay, if you want to go for or look for some trades. Now coming back to our main topic, as we can see, Dow Jones closed on Friday and falls by more than 300 points, Nasdaq down by 77 points, and a cumulative impact on S&P 500, which has fallen minus 29 point. Talking about the gold is flat. Oil now, which was trading nearly 115, 120 3 or 4 months back, now trading at 70 or closed at 71.59. So this is a huge crash. 40-50% of crash, at least 30 to 40% crash has already been done. Apart from that, the US 10-year yield from 4.2 to 3.58. So it's been coming down, but it's not about the long-term yield, it's about the short-term yield. Apart from that, the important thing to understand here is the VIX has started rising again. So last week we have seen the VIX closed below 20. Now this week it has closed above 20, and more specifically at 22.83. So VIX started rising higher, which is not at all a good sign. It may works both the side. It not only indicates that the stock market will go into correction mode, but it right now what does it indicate is an increase in the volatility, and that has already been started. Apart from that, natural gas started moving higher, so we are going to analyze the price chart of natural gas in this video. Obviously this is one of the most used commodity, so we are going to analyze it. And the most important thing is the US 3-year and 30-year, and we can clearly see US 3 months yield 4.3%, US 10-year yield 3.58%. So there is a clear cut divergence that we can see as far as the 3-month and 10-year yield is concerned. And this is this you can see is an inverted yield curve. I have already shown that in lots of my videos which I have made previous weeks, and I will show it to you again. So this is what you can see, an inverted yield curve, and this is quite, I would say, this is very much visible in front of you. Okay, whether it will translate into a big correction or not, people always think of big correction that has happened in 2002 and 2006 or 7, I would say we cannot have such big correction in the stock market, because that time central bank was not acting the way it had, or it was from 2008 onwards. So the way of market functioning has changed. Otherwise, the crash of 2020 will be much bigger. Okay, because in a month or so, the stock market has crashed more than 30% or more. So then we have seen the sharpest recovery for most of the companies across the globe, for most of the stocks across the globe. So if the central bank has not been acted, obviously we don't have this move, and probably we were trading, or the global economy, global stock market were trading in a slump. So that's something which we need to understand. apart from that apart from that, the US dollar index, which is comfortable for us, which is literally comfortable if I am looking at the US dollar index, because it has already indicated a big downfall which is yet to be seen. I'm not talking about the lows from the highs of 115. So it has already been fallen from 115 to 105, but I'm talking about the journey forward. So let us see each and everything one by one. First and foremost, about the natural gas chart, and natural gas is very important when you're talking about winters. So this is the price chart of natural gas futures, and you can clearly see, amidst all the volatility we have seen in the last couple of months, natural gas is holding on or above the important levels. Okay, and that is very important. So the levels which we can see here right now, so here we are. So the levels we are looking at are 6.2, which is your support, and we have 4.99 as our stop loss, and you can see natural gas is holding above 6.2 as well. So if it continues to hold above 6.2, condition is, if it continues to hold above 6.2 or more, in that case the next target that we are going to look at will be in between 9.38 and 10.2 on the upside. So there is a probability that again it will move back to the highs of 9.3 and $10 going forward. So beware. Otherwise it has to fall below 6.2 or even 4.99 if it want to go into the downtrend. Otherwise, whatever correction consolidation has to happen, it has already been happening, and probably most of the thing in the short term has already been done and dusted. So if it sustains above 6.2 or continue to sustain above that, we have a move towards 9 and $10 on the upside. Talking about the natural gas, beg your pardon, the dollar index, as I've told you that if you're looking at the price chart of dollar index, this is the long term chart, and I have probably seen this thing, and that's why I keep on saying the thing again and again. This is just the start. Okay, this is just the start of the dollar downtrend, and this is just 1 or 2 months that's been happening. I mean, this is the third month. Okay, that's been where the dollar started falling. Otherwise it will take the least is going to be 12 to 18 months. But if this is the end of the trend, then obviously last time we have seen the dollar started falling from the highs of 2002 to the lows of 2008, which means a 6-year swing on the downside. So this is something which we need to look at, and that is why what I am looking at as far as the range for dollar index. Okay, so this is the weekly chart, and this weekly chart will give you much clear picture. So I'm just going to connect the dots. Okay, I'm not going to do anything by myself. I'm just going to connect the dots, and if I do so, I will get my range. So this is the upside, and if I may use this to find the downside, which is also very clear. You can draw a couple of lines and you will see what's happening over here. So I think, yeah, this is what I can see as far as the downside is concerned, right? So this is what I can see as far as the downside is concerned. So this is the range in between which the dollar index has indeed been trading, and you can now clearly see where was the high and was going to be the low in the upcoming months and probably weeks or months. So the big swing that we are looking at will be in between 93 and 97. Okay, so if you are very much long in the dollar is not showing any signs for an up move. Rather, I'm not talking about the short term volatility, but dollar is something which is giving at least a comfort to me. I don't know about you. So if you have any other views, please share that with me so that I can enlighten myself. Okay, now this is what we can see as far as the dollar index is concerned. Now let's go back to Dow Jones and let us see what's happening over there. And if you're looking at Dow Jones, and this time what we can do over here is we will try to see the US 3-month yield and try to find out the peak, okay, because that's very important for us to do. Now because Dow Jones has started moving lower and has already broken below, as we can see, it has taken its resistance at 33,923. Then it also closed below 33,607. Actually it was the 200-day moving average. This is the 1-hour chart. So it closed below the support and the moving average as well. So the next support we have here is 33,410 and final support will be 33,270. If Dow Jones falls below 33,270, then the next support that we are going to look at will be 32,460 and 31,940. So below 33,270, big downside will open up. So please be aware about the moves if you are looking or if you want to go for or look for a trade as far as the price chart of Dow Jones is concerned. Okay, please be aware about these moves. Now talking about the Nasdaq, I think Nasdaq will now relatively I'm not saying that it won't fall, but it will fall less. That's my personal opinion. I may be wrong, but let us see what will happen. As of now, what's going to happen as far as Nasdaq is also concerned, and Nasdaq has closed below the red line, which is the 200-day moving average. So we have 11,014, we have 10,947, and we have 10,910. So these are going to be the next two or three support levels, because if Nasdaq closed below 10,910, then we have 10,740, 750 and 10,340, 350. These two levels will open up for Nasdaq. So suddenly the volatility does increase, but let us first see what the SPX is indicating now. Then after I will say my final comment, because as I've told you, volatility is going to be on the higher side, and this is very clear for us. And S&P 500 just holding above its 200-day moving average, which is near 3931. Okay, and the close was 3934 for S&P 500. So if it falls below 3930, then we have 3918 and 3908 on the downside as far as the next two support levels are concerned, below which downside will also open for S&P 500, where we are going to be looking at, or when we are going to have our two most important support level at 3859 and 3744 on the downside. Now one thing is very clear, and that's the volatility. Now, if you think that the market is now going to correct again, then think again. What I am thinking here is huge volatility, which is very much visible, and market does indicate volatile trades going forward. So volatility may happen on both the side. Volatility is not only talking about the downside, it also talking about the upside as well. So if we do have some volatility on the downside, we have the volatility on the upside as well. Okay, that is also possible. So don't do or don't think about the extreme. Neither become very optimistic nor become very pessimistic. That's what I'm trying to tell you as far as the trend is concerned. So let us see. This week the close is indeed negative. It is if you're looking at S&P, if you're looking at Dow Jones or Nasdaq, everything closed in negative, and they are trading very near to the important support levels. If it breaks below the important support level, then obviously some more downside will open up. But these are volatile moves, and it will normalize in the first week of or first 10 days or after first 10 days of January. So if a move happens on downside, a move happens on the upside as well. So that is something which you need to look at. Apart from that, what I have said is to see the US 3-month yield. We have analyzed US 10-year and 30-year, but let us see what US 3-month yield is actually telling us. And you can clearly see the kind of move. So we don't calculate the percentage of percentage, but anyways, if you are looking at the moves from the lower end to the higher end, it is 82,931%. I mean, if you can see the lows of 3-month yield, which is 0.005, and now it is trading a hell lot of 4.57. So kind of movement we have seen is humongous. This is extremely high, and these levels were equal to the levels that we have seen in 2006. Okay, so in terms of risk, market perceiving it as the riskiest event compared to 2006. So in terms of numbers, it is as risky as the event happened in 2006 and 7. Reasons are different. Maybe that time over optimism, and right now this is extreme money flow. So but one thing is very clear, it's become overstretched, but it will definitely take time. Last time it when it overstretched, it continues to overstretch from 2004 to 2006. So for 2 years, as you can see in RSI, it's become completely flat. So we have to match it up with the negative divergence of MACD. Let us see when will it happen. It will definitely take couple of months, but it is also driven by the event, so we have to see. So for the time being, the upper end of the resistance will be 5.73 and 7 as well. So if it moves toward those levels, you can expect a big market correction. That is for sure. If it moves toward 5.7 or 7, which is the upper end of the range, then you can expect some big correction. But right now it is not correct to think that the US 3-month yield will go to 5.7 or even 7. So on the downside, you have your support at 2.72 and on the upside right now we have resistance of 5.73 on the upside. So this is the current range that we are going to look at, but it is certainly overstretched, and let us see how many weeks or months it will take to become firm and then started moving down. And if it does not go down, if it moves toward 5.5 or 5.7, the eventual risk, which means the eventual risk in the short term, will further increase on the upside, and that causes extreme volatility into the stock market. So with this note, let us just end this video. So this is the end of this video. Thanks for watching.